Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a fantastic day. That almost seems sarcastic, asking you to have a fantastic day or hoping you are, because this is just a total crap market. I mean, there's no other way around it. This is trash conditions. I mean, look at this bearish engulfing candle. This is a 10% bearish engulfing candle. If that isn't manipulation, I don't know what is. This is crazy. Some quick humor for you folks. This is, I'm sure you've seen this a million times, but this is exactly what Bitcoin is doing right now, just destroying people every direction. So it's really difficult to get some good trades in. Thankfully, we caught a candle wick up to 91,000 yesterday for our short from 91K to 81.8K. Got a nice little 56% profit there in about 24 hours. So again, you just kind of got to catch the runners and hope for the best right now. The truth is, taking longs is not a good idea. We don't know where the bottom's at, and we got to kind of understand that. Yes, we're testing the 200-day SMA, but that's a consolation, folks. We don't trade on consolation. We got to recognize that there's still more liquidation on the downside, and just an overall sense here that it's not really fantastic. This is essentially what's going on in the market right now. Just non-stop garbage, and it's really difficult to trade. So just throwing it out there, not making excuses, just telling you that's how it is. This is the kind of market that we're in. The sooner you recognize that, the better off you're going to be, because you're maybe going to be taking less crazy, ridiculous trades. Like, trying to find the bottom right now is just, it's unreal, and it's not really something that you can do. So just keep that in mind. All right, so we're going to take a look at the back end data quickly here, and before we get started, I ask you hit the like button. Please comment below. Deeply appreciate that. Just hit the like button every single video, folks. Get in the habit of doing that. It's crazy. We get like less than 5% people liking the videos versus how many views I get. It's pretty low in the overall sense of considering how much wonderful feedback I get. So anyways, just quickly asking you that. Let's hear. So back in data, the last 7 days of liquidation, we can kind of see it's fairly, I wouldn't say sparse, but it's very sporadic. There's a lot of little areas here, not like one specific area that people are trying to get in. Okay? And that kind of just speaks to the fact that the market is super volatile. And when you have liquidation in a lot of different areas, it goes to show that, well, there's not like, nobody really knows what they're doing right now. It's the best way to describe it. So when we're looking at our analysis here today, I'm not going to be telling you like hidden bearish and bullish divergences. Oh, you got to buy this bottom, you got to buy the top, or sell the top, whatever. We're really trying to identify key level supports, some potential fib levels, maybe. Again, that's consolation as well. But for the most part, looking at these liquidation levels is a good way to kind of gauge what's going on. Okay, and the simple way to understand it is heavy concentrations between 78 to 76, now roughly 75,000, are present. They're still there. Obviously, we have this heavy concentration at about 80,700. So I wouldn't be surprised if we see another wick down there at some point. But the truth is, there's a lot more liquidation below the price than above the price. And you can see just how heavy it is between 78 and 76, okay? So just keep in mind that's a very real thing. It doesn't mean we're gonna go there, because you also gotta recognize that's somewhat of a support range, people buying the most in that range. So there's that too. But the truth is, we can see the liquidation delta has shifted bearish. This is basically a bearish sign, no other way around it. We went from super awesome to super terrible in less than 24 hours. So it's amazing how a couple of tweets will just destroy the entire market. Keep in mind, the tweet on Sunday was just kind of giving everyone, an idea of the reserve there. Things pushed up really hard, and then of course enter tariff wars, and now we're going down. So until like the whole tariff stuff stops, we're probably going to keep bleeding out. It makes sense. Anyways, take a look here at open interest. We can kind of see there's a ton of open interest above us, very little below us, reinforcing resistance in the 84, 86, and 88K range. We can see here as well that there's some support at about 80,000 even. That's the standard round number. So we see that a lot. So what does that mean for us here? Well, let's take a look at the daily. We looked at the weekly yesterday, and that was mostly bearish. We have a lot of momentous indicators letting us know we're going to go down further, but we have some SMAs kind of below the price. So the overall sentiment isn't truly bearish on the macro, but it's mostly bearish. Same thing here as well with the daily time frame. There's not a single thing you could argue that is like, oh my gosh, we're going to break out, we're going to bottom out here soon. The only thing that's a potential bottom out, and let's talk about this really quick, is the fact that we do have some support in this area of 84,000. I'm going to just round down 84,000 even. Hypothetically, that is a support range for us. And you're probably rolling your eyes right now like, wait a minute, how can that be a support if the price is below there? Well, the truth is today's daily candlestick hasn't closed yet, and we don't know if that's going to happen. But previously, we had 4 days in a row where the price action was unwilling to go below 84,000. If we close below that today, the likelihood of further downside would become greater. Okay? It would be something along these lines here. Right, so that's generally the concept. If we don't close above that level, it may be worth considering shorting from 84 to somewhere in the range of 77 to 76,000. That's a rough estimate, rough gauge for now, but that's roughly where we're at. We may very well recover, double bottom out here, and just be on our way as if it never happened. But a lot of that hinges on the fundamental catalyst ceasing to exist. We keep hitting the reset button in the market just based on the simple fact that the traditional markets are terrible right now. Everything's going down, and it's not really good for crypto. Crypto is a high-risk asset. What do you think people are going to sell first? Bitcoin. And then if Bitcoin goes down, what else goes down? Altcoins. Yeah, it's one of those things here. So anyways, let's take a quick look here. Nothing really to note of interest here. We're getting closer to 20 on the money flow index. It is a common pivot point, but we saw what happened previously when we got there. Once more, constellation, don't trade on that. That means very little. 4-hour time frame. Same thing here, we're below all moving averages, under 50 in the RSI. There's not a single thing that we really can recognize that's beneficial at this point. So what we probably want to do is take a look at some macro situations here and essentially kind of see where we're at. So what we're going to do, we're going to take our lowest point here, which are a candle wick down to about that 49, 48K range. Occurred back in August, if you recall that. And we're going to pull our fibs up to our most current time frame. So when it comes to Fibonacci retracement levels, folks, it's not like an exact science, but the general consensus is you want to go with the most lowest to the most highest, or the inverse there. So this kind of gives us perspective that this $80,000 range at 79 is that halfway point of retracement, and that's a common area of consolidation. So wouldn't be surprised if we do see 79K here in the relative near future. That would be essentially the next area of consideration. Obviously, there's this macro liquidation we got to be aware of, and that is also very close to that price action. So what I'm kind of hoping for here is a price of 84, 85K, come up to this local resistance range or previous support range, and essentially short from there to the 80 to 76K range. Again, I'm just kind of spitballing in my mind right now. That's roughly what I'm thinking about. We probably want to wait until today's candlestick closes first to get any perspective on if that support level is going to hold or not. But if we get a solid closure in just the 83 to 84K range or lower, then it seems pretty indicative that the price is going to continue lower. Just keep in mind, shorting the bottom is never a great opportunity or great idea. It kind of feels like that's where we're at right now. So I would urge caution if you're considering a short, because once more, just say there's like, oh, we're going to pause tariffs for a month. Then the price will go straight up and destroy you, right? That's how the market's working right now. So anyways, just some food for thought. I hope this was beneficial. I'll post my playout chart on Twitter, Telegram, and Discord. That'll be available for you now. And other than that, I just want to say thanks again for being an amazing part of my life. Thanks for always liking the video. And we'll look forward to seeing the next one. Hope you all have a great rest of your day. Thanks again so much for your time. See you soon.